And we're starting with euro-dollar pair with Din Lao.
During Thursday, February 26, the EURUSD rose to the 50% corrective level at 1.1830, rebounded from it, and reversed in favor of the US dollar, and declined almost to the 1.1770. Today, the pair is moving back to the 1.1830. Thus, another rebound from this level would favor the US dollar and lead to a decline toward 1.1770. A consolidation above 1830 would allow traders to expect continued growth toward the next corrective level of 38% at 1.1889. The wave structure on the hourly chart remains straightforward. The last completed downward wave broke the low of the previous wave, and the new upward wave has not yet broken the previous high. Therefore, the trend remains bearish. Bulls have paused within that had been a large-scale advance, which would not have been possible without Donald Trump, and this pause has become prolonged. However, the effective refusal of the US president to comply with the Supreme Court's decision could bring bullish traders back into the market. On the 4-hour chart, the pair reversed in favor of the US dollar after a bearish divergence formed on CCI technical indicator, but then returned to 76% corrective level at 1.1813. A rebound from this level would push the price back into downward movement towards 61% Fibonacci level at 1.1748. A consolidation above 1813 would increase the probability of further growth toward the 100% corrective level at 1.1919. No new emergent divergences are observed on any indicator.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility of the GBPUSD pair of the last 5 trading days is 79 pips. For the pound-dollar pair, this value is considered as average. On Friday, February 27, we expect movement within the range limited by the levels of 1.3401 and 35.59. The upper channel of the linear regression is directed upward, indicating a recovery of the trend. The CCI technical indicator has entered the oversold zone, signaling a possible end to the downward correction. The GBPUSD currency pair is on track to continue the upward trend of 2025, and its long-term prospects remain unchanged. Trump's policies will continue to put pressure on the US economy, so we do not expect the US currency to grow in 2026. Even its status as a reserve currency no longer matters to traders. Therefore, long positions with targets at 1.3916 would be irrelevant now. When the price is above the moving average line, it's a sign line on the graphic. When the price is below the moving average line, small short positions can be considered with target at 1.3428 and 3401. From time to time, the American currency demonstrates corrections on the global scale, but for a trend rise, it needs global positive factors.
That's all for today. See you online soon.